Now, sterling was very strong this morning based off expectations of what the jobs data was going to identify. And the real play on the market has been whether or not there's going to be a rate hike in May. And obviously good jobs data was going to indicate that that was a real possibility. And obviously sterling will rally if we have a rate hike via the other currencies, because there is a better return on sterling than the other currencies. The big play, I suppose, or the big fears still around the market: what's going on in Syria? What is the future going to hold there? And still there's talk of a trade war between China and the United States. It's getting boring at this stage, but it's definitely still prevalent. It's definitely still present. And you can see that in the way, as I explained at the beginning, gold is still at this elevated level. It's trading towards its highs. I mean, we did have that big jump up to 1365, but we are trading at elevated levels. But so is the FTSE VV, where we've been over the last few weeks. The Asian indices this morning, the Nikkei was up 12, the Hang Seng was down 260 points and was trading down into the close. The big news, I suppose, and the reason why the Dow was as strong as it was that the earnings from Netflix beat every expectation that was out there, and that stock alone rallied 5% in after hours trading last night, and that would have contributed massively to the 100 pips that we saw jump up in the Dow futures first thing this morning. In terms of the two currencies and gold, or certainly with sterling, right? Let's talk more about sterling. Sterling's strength over the last months, possibly year, has largely been a story of a dollar weakness. But more recently, what we're seeing is that Brexit's been pushed aside, and we're looking at more fundamental reasons. So that rally that you saw there today in sterling was because of the increasing speculation, or the increasing belief that we were going to see a rate hike in May, and it may well still happen. But we were also trading at at post-Brexit highs, so it needed some momentum, and it really needed something positive to push us through those levels. And I remember texting a couple of people this morning about what I expected to happen with sterling, and I was short sterling, so I was. It's not just what I was expecting to happen; it was what I was hoping to happen. But I expected the numbers to come off and then the market to fall 70 to 100 points, and it's fallen about that sort of range. We were going to have now if we'd rallied to the upside, we could have rallied 150 to 200 points if the data was strong and supported the fact that there was going to be a rate hike in May.